How have fintechs fared during the pandemic? Fintechs during the pandemic. It is evident that while there were some heavy losers during the pandemic, there were some massive gainers during the pandemic. We can classify them as the short and long-term effects of the COVID-19 pandemic based on 5 parts of the fintech ecosystem. Payments. Payments are the first and foremost important part of the fintech ecosystem. The companies that, most likely, will fall under this category are from the travel, entertainment, restaurants, and event management industries. The e-commerce businesses boomed enormously as consumers are preferring enhanced personalization in payment. Insurance. The pandemic's short-term effects on the insurance sector are a mixed bag as it mainly depends on the insurer's line of business. The P&C market, property and casualty, looks like the pandemic's downright casualty as auto claims decreased due to fewer people driving. Its long-term effects will see digital business models emerge victorious as more and more distribution shifts towards direct and digital services. Instant underwriting and online purchasing capabilities will contribute towards the digital life insurance startups' growth. Banking and lending. When it comes to the banking and lending part of the fintech ecosystem, there are mainly short-term effects caused by the pandemic. It is because big retail banks are short-term beneficiaries who can make profits through the Payment Protection Program (PPP), as it doesn't involve credit risk. The only long-term effect that we may see is a reduction in online consumer and business lenders. Credit startups like ODX, Amount, and powered by Upstart will find themselves in a more sustainable position with a cut interest rate and indefinitely halted withdrawals for investors. Wealth and capital markets. With the market coasting along without a clear direction, the short-term effects in the wealth and capital markets have it tapping upon all available forms of cash facilities. Firms struggling to maintain themselves are now getting scooped up at decreased valuations. Here the long-term effect will see more companies and firms start adopting various hybrid robo-advisory services to hold and increase their consumer bases in these difficult times. Also, consumers looking to save more have led to the demands for the centrally managed autopilot personal finance solutions. Real estate. Real estate was amongst the worst hit fintech industry as the pandemic brought the world to a standstill. The pandemic caused a short-term effect that led to restricted movements, and lending standards grew stiff in the freezing real estate market. The long-term effect will accelerate digital processing capabilities as people will favor virtual and online experiences more to secure deals. Virtual Agent Services Toolkit will see a rise, and demands for 3D staging location-based apps will be in more need.